Welcome, everybody. Welcome to Zion Capital FX. My name is Chance, and this is the video log spot where we take anyone that doesn't know anything about the markets in general and we put them on a path towards consistent profitability and financial freedom. Last episode, video log episode number 13, was our introduction into basic market structure theory. We're dealing strictly with swing structure right now, so the higher time frames that provide us a large framework to play in, right? It kind of establishes the sandbox that we can play in, and then from there we can get into more advanced stuff. So some of the basic concepts that we learned last time was what a swing high and swing low was, what a break of structure was, what strong lows and highs and what weak lows and highs were. Some gems that I threw out there was that after a break of structure, we need to expect a pullback on that specific time frame and always trade from strong structure to weak structure. So let's just do a brief review of all these concepts real quick, and then we'll jump in the charts and we'll actually do a walkthrough where we go over this on a real chart. So if we go to the bullish market structure theory on the left-hand side, here we have our starting point that forms a higher high. We don't know that this is a higher high until price starts to break away from it, right? I said that last time. It forms a higher low. Again, I'm going to reiterate this. We don't know this is a higher low until price starts to break away from it. Once it does, it happens to break the structure to the left of this previous higher high. So knowing that, what do we expect? We expect a pullback, because after a break of structure, expect a pullback on that specific time frame. And we get just that. A higher high is formed and it comes down and it retraces, right? We get the pullback. Okay, this is where the concept of strong lows, strong highs comes into play, and weak lows, weak highs. A strong low or high is a higher low that breaks structure. What do we know here from our bullish market structure theory? This higher low broke this structure. So this now becomes a strong low. What's this strong low going to do? Well, it's going to form the higher high, right? So in effect, it's like cause and effect. When you have an action, there's a reaction. Because this is a strong low and it broke structure, the effect is that when this higher high forms the higher low, this higher low will not break or violate or breach below the previous strong low. That was a lot to take in, but it's worth noting and trying to wrap your head around, right? So this is our strong low. When this higher high is formed, and when it goes to form the higher low is going to remain above this previous strong low. That's what makes it strong. Price will not breach or violate it because big money stepped in and they have a vested interest in protecting this higher low, right? They don't want to lose money, they want to make money. So if this in turn does not violate this strong low, then this becomes our next strong low, right? It just keeps occurring, so that when this higher low forms, it goes to form the higher high, right? What did it do? This higher low ran this weak high. That's why it's weak. That's why this higher high is weak, because it allowed price to basically mow it over and push it over. Weak highs or lows are just pushovers. Okay, that's a good way to think about it. So now that we know that this is our strong low, it took out this weak high when it broke the structure. This higher high is going to form another higher low. If this is to remain a strong low, price will not go below it. It does not. So this now is our strong low, because as it starts to pull away, it gives us the confirmation that this is a strong low. And then that, because this is a strong low, what do we expect? We expect it to take out this higher high, right? So this gives us an opportunity to get in a trade right here, and then we can put our take profit to the higher high, right? Because we always want to trade from strong structure. That's our idea of strong structure. It's all based off strong highs and strong lows. and we want to target the weak structure, the weak highs and weak lows, right? And it's the same thing if you go to the bearish side and all that, right? It's just, you know, vice versa. You flip it and you're good to go. But something else too that we need to review is our ranges. You know, when this higher low or higher high, I'm sorry, when this higher high is formed and it forms this higher low, you know, that was all in part of a range to the left, right? So when this higher low is formed and it goes to form this higher high, it breaks this structure. We have a new range that's formed. Our new range that we're dealing with goes all the way from the higher low to this higher high. So anything could happen from this higher high to this higher low. Any structure that forms here will be considered internal structure. When we'll get into internal structure at a later time, because all we're interested in right now is our swing highs and swinger lows, right? The bigger movements, the macro movement, right? We're looking at the big picture. So anything in here is internal structure. If it keeps going the way I have it displayed here, once it breaks this structure and it breaks out of that range, it's the continuation of the bullish market. But if for some reason price were to close below this range, what do we have now? We have a possible trend change coming our way, and this might turn into a bearish market, right? And these ranges change every time we have a break of structure. That's something people forget about. So price comes up, you know, forms this higher high. That's our range. It forms our range. It comes down, forms this higher low. And when it breaks this structure, guess what? Our range just changed. It is now from here to here. And then when price comes down, forms a higher low, and it breaks the structure to the left. You know, if the higher high is right here, and we know that when price starts to break away from it, then this becomes our new range, right? And then this range is null and void. So those were some key concepts that we went over, and let's jump into the charts right now. It's a lot to take in, and it might seem really confusing, but once we get into the charts, I'm hoping the penny drops and it just clicks for you. So let's get into it. Okay, so here we're on the chart with GU, the British pound to US dollar, and I'm just going to tell you right now, a chart's a chart, right? If you can identify the market structure and you know price action, it doesn't matter what chart you're on or, you know, really what asset you're looking at, whether it's Forex, indices, stocks, I mean, you name it, a chart's a chart. So that's why it's really important to nail down this key concept right here. So here we are, we're on bar replay. If you want to follow along at a later time, this is Wednesday, March 8th of 2023. So I'm in the central time zone, United States. I live in the Midwest. So, you know, 12 o'clock our time or my time, if you want to convert that so you know exactly where I'm starting out at. So anyway, let's get into it. We're going to ignore anything to the left here because what you're going to see here inevitably is going to be a trend change. And that's something that we're going to cover in the next video. So, and you'll be able to see those coming from a mile away, hopefully. So anyway, here we go. Price is going to start moving up. And it's just basically been a straight climb this entire time, right? So we're waiting for a pullback. We don't know when a swing high is going to occur until price starts to move away from it. Here, price starts to move away from it. So I'm going to consider that a swing high, right? This is really important. If you notice, I have the open, high, low, and close values on my chart because I like to hover around these candles and it gives me exactly what the high and close values were. So I know that looking here, the high of this candle is 22.34. If I hover over here, the high is less than 2200. So I know that this candle right here is my high. Price starts to pull away. So when price starts to pull away, that's how we know that that is our higher low, right? Something to talk about right here is this was our previous low. So what can we suffice to say? We can say that this is our range that we're playing with here. So this is our swing range. So anything that happens in here is going to be all internal structure. You know, you can't have internal without swing, and you can't have swing without internal. Basically, this is just the large framework that we're playing with. This is the sandbox. This is how big of the sandbox is that we're playing in, right? So if price were to close, if price were to just close below this line right here, then we know that we're entering a bearish market. But if it continues to break up, then we know that the bullish market is continuing and is still at play. Anything that happens in here, price comes down and does this little number. This is what we consider a complex pullback. So don't worry about that too much right now, but just know that this is our range that we're playing in. So we're going to see what price does. Sorry, fat fingered that right there. So we start to pull away from this low right here. So this possibly is going to be our swing low, right? And then we'll see what happens. What we get here? Boom, we've got a break of structure. So I'm going to move this. I'm going to take this guy. This is our break of structure right here. How do we know that's our break of structure? Well, we go from the highest point, our swing high, which is the top of that wick, and we draw this trend line, or as I have it, a break of structure, and we get a candle closure above that point, right? So you can see that this candle closes above, got a candle body above that line. That is considered our break of structure. After our break of structure, what do we expect? We expect a pullback. We don't know when the pullback is going to occur, but we just can anticipate one coming ahead on this specific time frame. Looks like we get a pullback at this point. So this is going to be our swing high. Put that there. Guess what? Our range has changed now from here to here. So if this bullish market was to continue, price could come down. It could come all the way down here, as long as it just doesn't, you know, as long as we don't get a candle close below this line, it could still come up and that bullish market can continue. Something that could happen is it could wick just below that line, but as long as we don't get a candle body closure, then we can still, you know, a bullish market is still at play here, is still valid. But if we get a candle closure below this line, then the bullish market is at an end and is possibly entering a bearish market where price will just continue trading lower. So this is our new swing range. Anything that can happen here, it, you know, price can do whatever it wants. Because this higher low broke this structure, what can we gather from that? Well, we can gather that this is our strong low, right? So what's the job? What's the objective of strong low? What's its only job? Its job is to break structure and to form a higher high, right? It breaks the structure. We have a higher high, and then this becomes our weak high. So what can we gather from that? Well, we know that price can ultimately come down to this point, and as long as this is a strong strong low, we can gather that price will not close below this point, right? Some that we can gather from that. And as long as this remains a strong low, then we can anticipate that price is going to close above and take out this weak high. So if we were to get in any trades here, we could get in a trade and we could target this weak structure, so it might look like something like this, right? So to our take profit set at this, might get in the trade right here, just a way of looking at it. So anyway, let's see here what happens. Looks like it's a smaller pullback. We got the candle closure here. This is our swing low. And now our range changes, right? This becomes our strong low. We haven't gotten the pullback to form the higher high. So this swing range is just kind of floating for right now. Looks like it's starting to pull back because, I forgot to put our break of structure. Sorry about that. Here's our break of structure. That candle body. After the break of structure, what do we expect? We expect another pullback. This is our new strong low, right? It's being protected. Does not violate here. I'm all kinds of a mess. I'm forgetting to do stuff. There's our swing range that we're dealing with. So that now that we see that this low is being protected right here, we can anticipate that price is going to trade above our weak high, right? So here's our new weak high. See if it does. There we get the break of structure. So put this there. There's our break of structure. After our break of structure, what do we expect? We expect a pullback. There's our pullback. So this is our new range that we're dealing with, right? Here's our new strong low. Here's our new weak high. Price can do whatever it wants. We get a significant up thrust move. Let's just say I wanted to target this right here. Let's say I wanted to target this weak high. That's a risk reward of 1.55, right? Why am I getting in here? Well, because I'm assuming, everything's been going according to plan as thus far. So this low could possibly be our next higher low, and it's respecting this previous strong low, right? And I know that if our theory is sound, price is not going to violate it. And then I'm going to target the weak structure or this weak high. Let's see how this trade were to play out. If I were to take it, oh, look at that. It won. Huh. All right. So now we have a break of structure from this high to here. After break of structure, what can we anticipate? We can anticipate a pullback. Let's go ahead and move our strong low up above here. Let's map out our swing highs. We're going to move our range. This is now our new range that we're playing with here. This is our new sandbox. What do we got going on here? Price starts to trade below. I'm going to say that this is our new swing high, right? Because we don't know this is our swing high until price starts to pull away from it. If this is going to remain our strong low, then we know that price will not trade any lower than that point. Sometimes it can drag out for a long time. We have a break of structure right there. There's our high. There's our break of structure. So let's move this. Notice how like none of this changes. Like as soon as the candle body closes, that's a mechanical, 100%. There's our break of structure. There's no guessing here, right? And at some point, if it seems really confusing, like where's my swing low? Just remember this little thing here. Your swing low is always going to be what causes the swing high, right? So our swing low is what causes the swing high. Well, it was this low right here, right? This high, what was the swing low that caused it? It was right here. If at any time you're confused, like there's like multiple candles and you're not sure what the swing low is, little handy trick is take a rectangle, right? Take the rectangle tool and then click on the swing high to where the break of structure occurred. And oh man, what's up with my rectangle here? And then just go to the lowest point between these 2 points. And that will be your swing low. Just a little, pro tip, right? So let's see. There's our swing low. Got our break of structure. Here is our new strong low. And this is our floating high, our floating swing range. So let's see what our new range will be. We had the break of structure. Looks like pullback is initiating. It doesn't, this is a good example where it doesn't really have to close too much higher than the break of structure. You could have an immediate pullback. And let's see what goes. Okay, it's starting to trade pretty low here as compared to the relative price action. The strong lows have been protected very easily. This is starting to kind of encroach onto the strong lows territory. But so let's go over our rules. If this is a strong low and this is to remain a bullish market structure, we know that price cannot go below this line right here. That's our swing range, right? It can go all the way there. It can wick below it. If it does wick below it and then continues up, our bullish structure is still intact and it's still at play. It isn't until we get that candle closure that we're into a bearish market and we have a possible trend change. So let's see what goes on. Okay, we're very close. Let's see if this strong low remains protected. Look at that. It remains protected, at least for the time being, right? So this is our new swing high. I should have marked that out earlier. Let's see here. See if we can find any trade opportunities here. Right there. I will get into a trade right there. I'm going to target there. I'm going to target the weak structure. That's a 2.5% trade. Let's see if it plays out. Boom. We get the candle closure. Right. Trade from the strong structure and I target the weak structure. Here's a little area of demand. This is supply and demand right here. We'll get into that at a later time. but it played out, right? So what did we have? We had a break of structure, right? So let's go back, trade this. Oh, I didn't mean to do that. I'll fix that. Okay. So where's our swing low? See how it can be kind of confusing where our swing low is, because you've got all this up down choppiness. So this is a good example. Just take your rectangle tool and go from where it broke structure to the last point of breaking structure. What is our lowest point? It is right here. So this is our swing low. Boom. And this is our swing high. I think that's safe to say because price is starting to pull away from it. So then what is our new swing range? It's this guy right here. Put this here. I know it seems like I'm going slow, but just bear with me. I'm kind of trying to ingrain these concepts for you. So it kind of wicks above it right here. So it's not a break of structure. We need a candle body closure. See if we get it. Did we get that break of structure right? No. Still see a gap here. I don't know if you can see that, but there's a gap between that candle body and that. So we haven't had a break of structure just yet. I'll leave it zoomed out. Boom, we've got the break of structure right there. So move this. After the break of structure, what can we expect? We can expect a pullback. Let's see here. Oh, I forgot to map out our swing low here. There's that. This range moves. So you could probably say that this was the swing high here. And then it comes down and breaks this structure. So then this was the swing low. This is the swing high. And then all of a sudden we have a break of structure to the downside, right? So actually, yeah, let's go ahead and map that out. So because that'll be a good intro for the next video. So we have our swing high pullback. Here is our range that we were playing in. Let me bar replay this again. Let's see here. So this is our swing high that formed. We get a swing low right here. So that this is our new range, right? Let's see if we get a break structure. If it closes above here, it does right there. So now this is our range that we're playing in. Let's change this, right? So now this is our range that we're playing in. If price closes below this, then we know that we have a possible trend change and we're entering a bearish market. If it closes above this, then we know that we have a bullish market at play. And then we have a break of structure to the downside. So that is when we can start anticipating that the bearish market is in control. And as you can see, price just keeps pushing down, right? So I hope you can see here, we used a 100% rules-based mechanical way of mapping out market structure from a bullish standpoint. Honestly, when you have this trend change, we'll get into trend changes in the next video, but how you'd map out your market structure to the bearish side, I mean, it's the exact same way, just flip it, right? So we have a break of structure here. We've got a break of structure here. right? Let's see. This is our new range, and then when this lower low is formed, it starts to pull away. This is the range. It can do whatever it wants. It closes below it. So then that becomes our break of structure right here. Right. Then let's see. This becomes our new range breaks. And you can just kind of see how that plays out, right? And then notice, oh, notice how the highs here. Why is it trading views being awfully glitchy today? There we go. Notice how these highs are now strong highs, and they keep running the weak lows, right? So something to think about, something to go over. It's 100% rules based mechanical. I hope that helped. There's our chart walkthrough. If that was confusing, put in the comments, any questions, concerns, and I will try to answer them as best as I can. I realize I'm not the best at explaining stuff, and there's plenty of other people out there that explain this stuff way better than I do. And this would probably be a good time to mention some of them. Matt Dunleavy from Photon Trading, Rob or Coldwater FX from Phantom Trading. If you YouTube people like Photon Trading and Phantom Trading, they've got some really good content out there. And honestly, that's where I learned a majority of what I know from those guys. So I'm giving you another additional resource other than me to help you out, because I understand that sometimes the way I explain stuff probably isn't the best, and it doesn't really help you. You don't have that aha moment when I explain something, but maybe Matt from Photon Trading, he explains it in a different way, and then you're like, oh yeah, that makes sense. Duh. So, take a look at them. They're awesome resources. They've helped me out tremendously. And yeah, so anyway, again, I'm not really here to, blow up a YouTube channel. I'm not trying to go viral. I'm trying to help you guys, find your path to financial freedom and to success. I hate the 9-to-5 job. I love trading. I'm obsessed with it. I live and breathe it. The guys that I work with, they can attest to that, and they're probably sick of me talking about trading at work. So anyway, got any questions, comments, concerns, put it in the comments and I'll read it. And thanks everybody. I'm just waffling at this point. So I will see you at the next one. Next video is going to be about trend changes and seeing the trend change and how to mechanically map that out. So anyway, talk to you later.